Hey guys, Brent the Broker here with you today. Fact versus fiction. Are we in a housing bubble? Before we jump into today's video, guys, don't forget to subscribe, turn bells on for notification, like the video, and leave a comment if we're bringing any value to your life. And stay tuned to the end of the video for our pro tip of the day. Are we in a housing bubble? No, we're not. I know that you see all of these sensational headlines trying to get you to click on their website and tell you why it's all doom and gloom. But here's the thing. Last time we saw a rapid increase in price appreciation followed by a market crash. And so it's understandable why people today would believe that the rapid increase in price appreciation, especially that we've seen the last couple years, would be similar as before, where the market, is going to crash. But the fundamentals that we see in the market today are not anything like last time. The value of any asset is based on supply versus demand. So when you have a lot of supply and a little demand, then the buyers are in charge and prices are going to come down. If you have no supply and a lot of demand, a lot of people chasing few goods or assets, then it's going to push values up. In the last crash, there was a oversupply of new construction hitting the market, and also because lending standards were really loose, there was people getting mortgages for homes that wouldn't be able to get them in today's environment and had a higher likelihood of not being able to make their payment. So new construction and a bunch of people who can't make the payment, meaning a bunch of foreclosures. So those two things combined flooded the market with supply when there wasn't the demand behind it to absorb the supply. So back then we had a lot of supply and a little demand, and that's why the prices went down for that period of time. Today we're seeing the exact opposite. New construction since the last crash has lagged significantly, and we'll put a graphic up on the screen probably right now as I'm talking that shows new construction in the last handful of years compared to averages. So new construction is down and foreclosures are down significantly as well. And we'll probably put that graphic up on the screen as well. You're probably looking at it right now. The value of any asset is based on supply and demand. And yes, we've seen similar run-ups of price appreciation, which could make people nervous that today is going to be similar to last time, but it's just not. Even though the market is shifting, even though rates are going up, even though more homes are coming onto the market, and even though things are slowing down, that's a good thing, because we would not have been able to sustain 15, 18, 20% a year appreciation. So as interest rates go up, the demand's going to come down because less buyers can afford it. The supply is going to go up as sellers try to, rush to the market to catch the last end of the, the crazy market and the high prices. As supply and demand sort of levels out, we're going to see a more normal supply demand balance, hopefully, in the market. And it's just going to normalize. Even though it's going to decelerate and things are going to slow down, rather than values going up 20% a year, they're probably going to go up something more in the neighborhood of 3 to 6% a year over the next handful of years as we have a little bit more supply and a little bit less demand. But none of the experts that we follow, none of the data points that we see today are implying that there is a ton of supply coming from somewhere or that the demand is going to completely fall off. Now, anyone who pretends to have a crystal ball and be able to predict these things perfectly is full of it. So I'm not saying that, I know this for a fact, but again, based on the data that we see today and where we see the market going, we expect continued price appreciation at a slower pace than we see today, market shifting back to something more normal. But are we in a housing bubble? No, because that would indicate that we have way more supply than we do demand, which we had last time and we don't have this time. And so the pro tip of the day is this, guys. With values continuing to go up, interest rates continuing to go up, I know that with the shifting market and all the headlines, people are waiting to see what the market's going to do, but based on what we know today and the experts that we follow, we think it's going to be more costly to wait. Jumping in sooner rather than later is probably going to be a good idea, because if you wait a year or two, prices are going to be more expensive, rates might be even higher, and you're going to end up paying more money for the same house a year or two from now that you could pay today based on the data that we see today. Again, it depends on your personal financial situation. Everybody's situation is unique personally and financially, so get with your team and make sure that you're reviewing everything and doing your due diligence. But if you're financially and personally ready for this, sooner rather than later, because timing the market just never works out for anybody.